In this video, guys, let's look at should you hold stock trades over earnings? Stay tuned. Hey guys, warm welcome to you. All right, so this is my opinion on whether you should hold stock trades over earnings. Now, I'm going to kind of separate this into the time frame that you're trading. Now, if you're trading over multiple months, one of the things that you're probably trying to do is you're probably trying to work into a position, and that position might span over earnings. So the idea is, let's use Zoom as a great example throughout this whole video, and we can use any other stock, but this is kind of good because it's in people's minds, a lot of expectations to it, so it kind of is a good example to use. Let's say you've been kind of picking up Zoom and you're running up to earnings. If you're holding over a multiple month period, you're probably, the whole thesis is that you're there early and you're expecting a little bit of a boost from earnings. Now, you may well hold over earnings if you have an adequate cushion. If you've been picking up positions or you've been holding it, runs up to earnings, you've been in from kind of 220, it's closing the day before earnings at kind of $300. You've got a decent cushion, and this is kind of the apt word here, guys, the cushion. So you make a decision and go, hey, I'm up $80, my P&L is X, I am prepared to risk an adverse spike that may well give back unrealized P&L. Now, of course, there's an argument, guys, to say, hey, it's your money anyway, just because it's realized or unrealized, it's still in your account, and I agree. You're not in the habit of just gambling money, but psychologically, people feel more comfortable and are like, okay, well, if the thesis of the trade is to get a run up to earnings and build that cushion and then use that as almost like a free gamble over earnings, because let's not beat around the bush, guys, it is a gamble over earnings, then I don't think that's a bad thing to do. As long as you recognize what you're doing, you're giving up control and risk over earnings, and you can't control what's going to happen. Now, of course, you can trade after hours and you can get, but often the spikes are going to be so quick, it is what it is. Sometimes it's going to be a 10% move, 20% or more. Now, that's a thesis, but for most of us, we're not holding for multiple months. We're going to be holding for a few days. And so the question becomes, hey, I'm holding for a few days, should I hold over earnings? Or even should I just have a guess over earnings? Because a lot of people say, hey, great example with Zoom. Zoom's doing really well at the moment. The lockdown, loads of people are using it here, loads of people talking about it. Are they going to do well? And we don't know. The difference is what the expectation is and what they do. We just don't know what everyone's looking at. So you are really just gambling. If you hold over earnings, you are really just gambling. And if you think about, is it a feasible strategy long term? The answer, in my opinion, is no, because you just don't know how the company has done. You just don't know how the street or the city will react to earnings. So if you think, oh, Zoom's done really, really great, I know you just don't know what the expectation is. Maybe they expect to do even better and they haven't done it, in which case, the market's going to come off. So I think the hard and fast rule, guys, is, if you have a cushion, and you're prepared to risk that money on by holding over earnings, perhaps you take off half the position, perhaps there's all sorts of risk management strategies you can do, then understand that you're giving up risk control. And if you accept that, you're a big boy and girl, you know the rules of the game, you know how it can work. I don't think that's a bad thing. I think specifically just betting over earnings, saying, oh, I think Netflix is going to be really good because loads of my mates are using Netflix, isn't a sustainable strategy. You might get away with it a couple of times, you might get it right 10 times in a row, but then again, you might lose 10 times in a row. To me, that feels much more of a gamble than maybe saying, hey, you know what, we've had a good run, I've got a bit of a cushion, I'm going to bank a couple of grand, I'm going to risk a little bit more, and if I get a last pop, great. If I don't and I give it all back, fine, I'll accept it. And I know that a lot of people in the comments are going to go, well, it doesn't make any sense, it's the same money. I get it, but sometimes it's a psychological thing, and sometimes if that's your thesis of building the profit and using that as a bit of a lever to get a last little boost from earnings or not, then I don't think that's a bad thing. An example, guys, in Zoom, if you look at Zoom now, everyone expected Zoom to do really, really well, and the earnings have come out, and today they are last night, and today they're down. It's like 7%. So if you'd held over earnings, expected Zoom to do really, really well because it's now a household name, and all the good bullish arguments that make perfect sense. The fact of the matter is, whatever they were expecting and whatever happened, the street doesn't like it, and it's a supply and demand issue, guys. They're down, whatever it is, 8% on the day, 7% on the day. And you're going to have lost money if you expected to hold over earnings. So summary, guys, is No, I wouldn't be holding stuff over earnings the shorter time frame you are. The longer time frame you are, then earnings become part of the thesis. If you're holding over a multiple period of time, the kind of thesis of the trade is less technical. Maybe use technicals to get in, but the thesis is they're going to outperform, and so you want to hold over the earnings period, and you're happy to hold over the earnings period using that cushion, because part of the thesis is they're going to do well, the company's going to do well, they're going to start making more money, etc., 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 and so it makes sense to. But the shorter term stuff, I feel the shorter term you're going, the more you're getting into a gambling zone, and you can struggle. All right, guys. And also, finally, if we look at historical earnings, you just don't know, what's going to happen. They generally don't have a precursor for what's going to happen in this earnings. I mean, that was a great earnings, gapped up massively. If you were long on that, you'd be very happy. Today looks like we're going to gap down whatever 7% works out to be. So you can't really use previous earnings as an indicator of what current earnings are going to be either. All right, guys, take care. See you next one. Keep that risk managed. Bye-bye.